Hello everyone, this is the part 2 of chapter Breakout Stops and Retracements. Before watching this video, make sure that you have checked the part 1 of this chapter and then you can come to this. So in the previous part, we saw until specialist breakouts, right? Yeah, we saw what time stops were and we also saw what money stops are. And we saw what are gaps. We know that there are various gap ups and gap downs in the market, right? Now we are going to start with something which is known as a specialist breakout. Until now we were seeing what a breakout is, right? Now there is something which is known as a false breakout as well. We have been studying about various methods to confirm a breakout. Why were we studying how to confirm a breakout? Because there are breakouts which can be a false breakout too, which means which can be a specialist breakout. When I say specialist breakout, I am talking about my false breakout only. For example, let us say that the zone has been acting as a constant resistance over and over again. Now what happens is my market goes up and it sustains over here and closes over here. Okay, so that means a breakout has happened, right? The very next day my price comes back into the zone and dumps. So that means this was a false breakout. So how are you going to identify that? And how are you going to set stop losses for a false breakout? That's what we have been seeing. So until now when we were seeing examples, every time a support or a resistance broke, we used to set stop loss somewhere over here. That is to protect ourselves in case of any specialist breakout happens. Okay. Let's see some quick examples of false breakout. Okay, I've been using the Chola Finance chart over and over again, so let me go to something else. So this is my watch list. So you can see that they are very volatile in nature. If you would like to add them to your watch list, I'm not asking you to, it's not a call or it's not me asking you to purchase these stocks. This is just my watch list because these stocks have proper momentum in order for me to trade intraday. Okay, let's go on Shree Cement Limited. This is a very expensive stock. If you can see the price, it is like over 24,900. Give me a second. Okay. So now let's first find out a false breakout in this and then we can discuss how to okay. So if you look at this chart over here, if you look at this zone, the zone broke out and the price did go up, but the price didn't go that much up because the volumes weren't that high over here. Anyway, that's not what I'm saying. I want to show you what a false breakout is. A false breakout, let me find an example of a false breakout. Okay, if you look at this here, so no, even not this. Alright, if you look at this zone over here, I'm referring to a period over here. Alright, so if you look at this zone over here, right? So the price went up, resisted, came down, went up, resisted, came down. But here it went up, it sustained, made a big green candle over here. But what happened next? What happened next? The price fell down, the price dumped over here. So this is a case of a fake breakout. Now how am I going to confirm a fake breakout? Now look at the volumes below. The volumes aren't high. Look at the volumes over here. They are so high. Look at this volume. They are so high. But here, when a breakout happened, the volumes are not that strong. Yes, they are stronger as compared to these, but they aren't that strong. They need to look somewhat like this, and in order to show the conviction in a breakout, to show that the breakout is strong, you need a very strong volume. So that was what we saw. That is the reason why we have been studying about how to confirm a breakout, because these kind of situations happen in the market. So that's my specialist breakout or a false breakout. Okay, so now we go to the new topic, which is retracements. What is retracements? So a trend rarely follows a line without including a number of smaller trends. This is what we've been seeing, the fractal nature in the markets, right? So the smaller counterparts which we've been referring to when we were discussing the fractal nature, those things are known as retracements. So retracements are basically corrections. So there is one thing which is known as a principal trend, which is the main trend, and then we have further corrections or retracements inside my trend. Okay, so the retracements can be of two types. They can either be pullbacks or throwbacks. So nothing to worry, pullbacks and throwbacks. So when you are talking about a uptrend, let's say a resistance got broke out, so my stock went up till here and then it came down again, retested over here, and then it goes up again. So this place where the stock had to come back and touch the previous resistance, which is now my support, right? So that thing is known as a retracement, that the stock broke out of its resistance zone, retraced it, and then went up again. So this, it went up and it came down. So that is what is known as a throwback. That means that it threw itself back to the initial zone. Okay, so that is what is my throwback. Now let's see what a pullback is. So pullback is just the opposite. This is my support and my stock has been taking support over and over again. My stock broke down the support zone and went till here, came back, touched the previous support, which is now my resistance, and went further down. So this is where the stock pulled back for a bit. So that is my pullback. Also always remember that once a support is broken, it becomes a resistance, and once a resistance is broken, it becomes a support. You can write it down. Prior support is new resistance. When I say prior support, I am talking about the support which has been broken, and prior resistance, once a resistance is broken, it becomes a support. It becomes a new support. Okay, so these were very important concepts. So throwback is when the support is broken, and throwbacks is when resistance is broken, and pullback is when a support is broken. Hope that is clear. Let's see some of the real life examples of retracements now quickly on our charts. Let's just see our Shri Cement itself. Alright, so if you look at the zone over here, this acted like a strong support zone, right? So let me just quickly mark a rectangle over here. Now look at this zone over here. This zone somewhere over here is an important support zone for me, right? Okay, let me just extend it a little bit over here. Okay, so this is one important support zone for me. My price came down, went up, came down, touched, went up. Here my price broke down, right? In this zone my price broke down. Now what happened after my price broke down? My price went down. Let me just extend the zone so you guys can understand it better. Okay, so my price went down, came back up to the same exact zone. It respected the zone which I drew and further went down. So what did my stock do? It broke the support. After breaking the support, it pulled back for a bit and it further went down. So this is an example of my perfect pullback. Okay, and if you draw the zone properly by touching these wicks, you can see that your stock exactly respected the zone and it pumped down again. So this is a great example of a pullback wherein a support has been broken down and the stock pulls back for a bit, and after it pulls back, it further dumps down. One thing to keep in mind is when such a situation happens, when you have to confirm it, so when the initial breakdown happened, you can see that the breakdown happened at high volume, right? But when the stock was going back up, when the stock was basically retracing, my volumes are down. So retracement is always in the opposite direction, and if the opposite direction is having strong volumes, then that might be a fake breakout, right? Naturally, think about it for a second. If a stock is initially going down, if the main trend is a breakdown, then the uptrend, which is inside the downtrend, the uptrend shouldn't be strong, right? The uptrend should not be strong since it's just a correction. So look at this here. During my downtrend, my volumes are very strong, but during my uptrend, my volumes are down. So that is one more very essential thing which I can use in my trading. So this was an example of a pullback, right? This was an example of a pullback, and this was an example of a support breaking. So I know I just say retracements, be it breakdown of a support or breakdown of a resistance, both of them I just call them as retracements. But in the book they have mentioned pullback and throwbacks, so I know it can be a little bit confusing because you must be used to saying this as well. But pullback is basically when a support is broken down and the stock pulls back up. So when you're pulling something, it is like upwards, right? And when the resistance is broken, it's easy to fall down, so that's why they're saying throwback. Okay, that's the logic behind it. Anyway, so now let's also, this was an example of a pullback, right? So that's what people use pullback trading for. When once the stock pulls back over here, they look at the shooting star over here. Can you see a shooting star? Okay, in the next chapter we learn the patterns, but this is a perfect place to enter into the trade, and you can set a stop loss above the shooting star and look at the how much money you must have made if you would have entered. So that's how you can use a pullback trading. Now let's go and see our throwback trading. Okay, so this zone over here, if you look at the zone over here, I'm just extending the zone. I'll tell you why I did that. Okay, look at the zone. The price resisted the zone over and over again, right? Over and over again. Here, if you can see, my stock broke out of the zone, okay? And it went up. It tried to go up, and from here, it came down again. So it throwback. This is a throwback of the stock. The stock came back again, and from here, it again pumped up. So this is an example of my throwback trading, right? So if you look at this, when the breakout happens, my volumes are big greens over here. But when my pullback was happening, my volumes are dried up over here. So this again confirms that the throwback is just it's just a correction, so it doesn't really matter. So why do these pullbacks or throwbacks happen in the first place? So what happens is that people partially book their profits, right? So once, if let's say I'm trading with a capital of 1 crore, it's just an example. The moment I see, just an example, the moment I see 50 lakhs profit in my P&L, what would my initial thought be? Let me just book half of the profits right now and let me keep the other capital going. So when hundreds of people like me start booking their profits partially, this correction might come in the market. But this correction is not invalidating the primary trend because the volumes are dried up. So this is an example of my throwback. So I hope you understood the retracements, pullbacks and throwbacks and how to use them. Okay, so now we come to the most important concept in the entire, it's going to be the most important concept of your entire trading journey. If you want to sustain for a long term in this market, you need to have a proper risk return ratio. You need to. I cannot even emphasize on how important and how essential it is to have a proper risk to reward ratio. Why? Because see, trading is uncertain, so naturally you might have losses as well. But if the losses are limited and if your profits are always determined, then it's going to be easy for you. It's something like, let's say every time I win a trade, I'm getting 1000 rupees. Every time I win a trade. And every time I lose a trade, I am losing 500 rupees. It's like that. So if I had one loss, then I lost 500 rupees, right? If I had one profit, I gained 2 times my loss. So that is something which is good, right? So see, one loss should not be wiping out your entire profit. That's what I'm trying to say. You need to have a proper risk management system. We will be discussing that further, but this is just an overview of the same. Also, the reason why we are setting a stop loss is also that you have a good risk management system. And how are you supposed to calculate your risk reward ratio? So if your risk is, let's say, 1 time, then your profit should be like 3. So that's how they want you to calculate a proper risk reward system. So let me just go back to my example again. Let's just take the same example again, and let's assume that I'm trading this pullback, okay, and this shooting star is where I want to enter into my trade. So let me calculate my risk reward ratio. Since I'm shorting over here, I am entering below the shooting star and my stop loss is above the shooting star. Look at this. How much profit I would have made? This would have been 1:6. Look at this. Risk reward would be 1:6. But obviously, naturally, I don't think it would be easy to stay in a trade for this long, because it depends on your experience. And if you look at this big candle over here, this is where you must have seen that more than half of your profit has been wiped out. So you might get panic, you might just panic in the real market and exit. It looks good, the start, when we look at the charts which are of the market which is closed, right? So the market hasn't functioned right now. We are literally looking at some data months back. It looks amazing, like, imagining that, oh, this trade would have given us 1:6 ratio. But in the real market, it's not that easy, because when you look at such a candle with such a big wick, you are basically looking at your P&L where half of your profit has been wiped out. So in the real market, it's not so easy to hold on for so long. However, it totally depends on your own experience. So a safe, good risk to reward ratio in the beginning would be 1:2 or 1:3. So 1:2. Look at this, how 1:2 has been easily met within 1, 2, 3, 4, 5, 6, 6 candles. Okay. So look, my risk is only this much, but I'm getting twice the profit, right? 1:2. If you are, if you can take a little bit more risk, you can set the risk reward ratio to be 1:3, and that would also have been met by here. So that's how, look at this, with this less risk, I'm able to gain this much of profit. Isn't that amazing? So that's what I have been trying to explain, that it is very, very essential for you to have a good risk reward system. And if you're trading a breakout or a breakdown, the stop loss must be set in such a place where your trade will get invalidated. So I am trading this because I know that the price is going to go down. If my price starts going above the zone, if the price would have gone like this, if it would have gone into the zone again, even if it would have gone above the zone, then that would mean that my trade is invalidated, right? Because my plan was that it would go down, so there is no point of holding the stock when the price went up again. So this would be a perfect place for me to exit. So this is my perfect place for me to set a stop loss. So that is how you have to set your stop losses, based on the price action, based on the logic behind why you are trading. Before you get into any trade, be it intraday, swing, long-term, positional, whatever, make sure to ask yourself 5 questions. The first thing is it a random trade which I'm taking, or should I actually take it? That's the very first thing you need to ask yourself. Second thing, what is the logic behind my trade? Why am I taking this trade? What is the reason behind it? You need to be able to explain it to yourself. The third thing is, where should I set my stop loss? Fourth, where should I book my profit? And fifth, is my volume confirming my trade? These are the 5 questions you need to ask yourself over and over again before every single trade. This is going to change your entire trading journey. You need to ask yourself these questions, because the more you overtrade, the more you trade without proper reasons and without the confirmation of the volume, then nothing's gonna happen. You are just gonna lose money, and you will just be seeing your PNL in red every day. So always ask yourself these 5 questions. Make it a habit to ask yourself these 5 questions every time before you enter into a trade. Okay. Alright, so that's it. We are done with this chapter. Our chapter number 6 is done. Let me just quickly conclude this chapter. Okay, so breakouts from support, resistance or trend lines are the primary signal that the price has changed direction or is re-accelerating in its original direction. As such, breakouts are usually the first signal to act. Because breakouts can be false and often are, some means of confirming a breakout is necessary. We have covered a few methods, but none of them is foolproof. The technical analyst must experiment with different methods and find those most satisfactory to his method of trading or investing. The same is said for stops. Although stops need not be as precise, they are always necessary when a position has been entered, and they must never be cancelled or changed until they are triggered or the position is closed. Their purpose is to keep the investor honest and solvent. The rules for breakouts apply equally to stops. They should account for previous support or resistance or trend, should adjust for the security's volatility, and should not be placed too close to the current price as to invite a false signal or whipsaw. So that was my chapter number 6. If you have any doubts, then you can comment it in the description box below. Also, make sure to purchase the original curriculum of CMT and read the book thoroughly before you give the exam, and also log on to your trading platform and mark the charts and practically apply what you've been learning in these videos. Otherwise, there is, it's not going to be of much use for you. Also, you can check the description box below to watch the other videos. Thank you.